we're going to follow Oracle too, because it's been a brutal month for that name and some of the adjacent ones around it. We can take a look at this stock today, down 22% month to date. And how about this? Morgan Stanley's out with a really interesting note and a trade that they're talking about. They reiterate their view that risks skew to the downside for Oracle credit. That's arguably been a bigger story than the precipitous, decline that you've seen in the equity. Their credit analysts had previously recommended investors buy credit default swaps on Oracle, but hedge that exposure with long positions in the bonds. Well, now they've changed that, and they suggest after basis compression, we remove the buy bond leg of our trade and now maintain buy the 5-year CDS protection outright. Seema Modi has been with us almost every day. She's with us again tracking this. So this would suggest that the issues at the heart of the conversation around Oracle aren't going away with the turn of a calendar.
That's right, Scott. And the market just wants more clarity as well. Morgan Stanley's credit team, they're growing more confident in this call, by the way, to go long Oracle's credit default swaps with this new note that you just mentioned. Credit analyst Lindsay Tyler writing that pressure on Oracle's credit as it takes out new construction loans could drive more hedging by bondholders in the coming weeks. She adds that bondholders' sentiment has shifted this fall as a result of the hyperscaler mega bond deals that we've been seeing, which offer investment alternatives, and shares that concerns are starting to grow around Oracle stock, which may incentivize the company's management to outline a financing plan on its upcoming earnings call. Now, the exact earnings date has yet to be released, Scott, but we're expecting Oracle results to be coming out the week of December 8th. What will be key is Oracle's future debt commitments. Right now, the running estimate across the street is $90 billion over the next 3 years, but analysts are questioning in recent days whether it can reach this target without OpenAI providing reassurances around that 5-year, $300 billion deal.
Yeah, I have a feeling you and me are going to have many conversations like this over the course of the next 30 days. Less, of course, if you factor in the amount of trading days that are left. Seema, thanks. Malcolm, I come to you. You own the stock. I've talked to you about it before. But now how do you think about it? Are you watching the debt, the credit default swaps, more than the stock price these days?
Yeah, so this one has given me a ton of pause. And so one of my rules as an investor is just when in doubt, don't. And this one has a lot of doubt around it. So I've been trying to find an opportunity to get back into this name following selling 50% of the position across the book back in October. And I've just finally decided there's too much smoke here for me to feel comfortable adding additional dollars back into this name. So we're taking those gains. We'll find another place to deploy it within the AI trade that I think is more likely to be on solid footing, because just the reporting that the information has done around Meta and their creative financing and off-book financing and everything else of their data centers to get into this space in a way that doesn't shake their balance sheet makes me wonder the same about Oracle, even more, I think, because they don't have a direct path the same way that Meta does to generating revenue from those investments. And so I think that Oracle is a story that needs to be continue to be reported on, like you just mentioned, Seema's been doing day after day. Until there's clarity there, I just think it's one that you stay away from.
It tees up a pretty good week for what's going to come down next week, software earnings. The software ETF, by the way, is having its worst month since January of 2022. Now, it's been skewed by a few names versus others. But Malcolm, you do have a move related to that, and I think that's what you're alluding to in your answer about Oracle just now. You taking your dollars and putting them elsewhere where you feel more confident. Maybe cyber, maybe Zscaler, for example, which, by the way, the target got trimmed today to 390 from 400 at Berenberg. You added more. Why?
Well, I don't know if a $10 trim is that meaningful to me as an investor and would shake my confidence all that much. And I think just separately, I think throwing the software names in with the rest of software, throwing the cybersecurity names in with the rest of software is the market doing a disservice here. And it's been happening for quite a while, and I think that's the reason that a lot of these names have been trading down. But I bought more Zscaler on Wednesday following earnings because the stock traded down about 10%, and I don't really know what the market was looking for. They reported 26% growth in annually recurring revenue year over year. They reported additional, they beat basically across the board. And to me, it looks like an opportunity where this company that's redone its sales force over the last year, it's gotten very focused with the Z-Flex model on being the platform that a lot of these companies try to become. To me, it's firing on all cylinders. And so investors looking for an opportunity to get into a name that hasn't really had the growth that we talked about, NVIDIA at 1,000%, for example, or even Alphabet at 250% or something. I know it's selling at a little bit of a premium right now, but Zscaler, to me, 45% or so of the Fortune 500 they're securing right now. Looks like a great opportunity to be buying into a company that's been taken down with the entire sector that it doesn't really belong to, in my opinion.
Yeah, we'll get some earnings next week. We'll have time on both Monday and Tuesday to talk about those.